You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Henry the FLOWMASTER Schwartz from CBOE. The Option Block is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's tools and services gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/VIX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody. That music means it is Thursday. It is noon Central. It is 1 p.m. Eastern. It is time to see what's going on in these crazy markets. Yes, it is time for episode 2 of your bi-weekly options extravaganza, known around the globe, even in Rwanda, as the Option Block. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the ever-entertaining, ever-enlightening network upon which so many of you are binging these days. Couple quick notes at the top. Of course, if you like what you hear, throw some stars, however you get it. The app, YouTube, iTunes, whatever your platform lets you do, does help new people discover the content. Of course, if you want to discover more content, and who can blame you, 200 plus hours waiting for you the second you hit that button. Plus, you can join Meets and all the many others who've won pro trading crates out there. TheOptionsInsider.com/pro. The place to go to learn more. As we learn what's going on here in the old markets and who's joining us on the old Option Block All-Star panel today. First, let's go out to a dark, a stormy, an ever-turbulent area of the U.S. where few would dare to venture, let alone live. One man has staked his flag there amongst not only the clam pirates, but the hordes of locusts. Yes, it is the shores of Maine, where we are joined once again by the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, how go things? Are you surviving the plague of locusts, sir?
I am, and if you hear the plague, you know that I am protected somewhat, but they are just waiting outside the door.
just waiting for you to go out that door. And then bam, if you don't hear from the Rock Lobster again, if he goes quiet on Twitter, listeners, you'll know why. The horde of locusts have finally sprung their trap that they've been waiting to do so patiently. And also joining us from somewhere mobile office adjacent. He's out in the hinterland somewhere, moving and shaking, rocking and rolling as he is wont to do. He is the uncleist of Mike's, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the show, to you as well.
Always happy to be here. I am a man of the people, serving the public. That is me.
Got to be out pressing the flesh. The uncleist of Mike's. He'll be joining us from the St. Charles Wealth Global HQ post-haste. And also joining us, I'm assuming from the CBOE East, a.k.a. the CBOE NYC headquarters. Who knows? Maybe he's from somewhere upstate. We'll find out. He is the FLOWMASTER himself, which I have just discovered, thanks to him, is also apparently a unique brand of muffler. I would have assumed it was some sort of bathroom appliance to keep maybe the pipe flow going or something like that. Nope, it's a muffler brand, the FLOWMASTER. You learn something every day, listeners. He is the FLOWMASTER himself. The other one, Mr. Henry Schwartz from CBOE. Mr. FLOWMASTER, welcome back to the show. Where are you beaming in from today, sir?
I am in the New York office of CBOE, which is right downtown by the Staten Island Ferry. And FLOWMASTER is a muffler, which kind of goes along with, a lot of the times when you're working on technology and derivatives, people try to come up with things to do with the exhaust, right? So, you've got some sort of output of the data and turning it into unusual volume alerts and all the other cool things that we do. Sometimes people call that monetizing the exhaust. So it kind of fits. And the bathroom thing that you were thinking of, I think that might be the Flowmatic.
Oh, okay. I knew something along those lines. So do those cool kids at CBOE, do they call New York office, do they call it CBOE East, or am I just making that up? Sounds pretty cool.
No, you're just making that up. We call it, sometimes they call it 17SS, because that's...
Well, you know what happens now that I've whispered it into the ether here on the network. They're going to start calling it CBOE East. As we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down what the heck is trading. And man, we have already done a lot of living by the time we fired up the old dials to start the show here today, listeners. As we're kicking off the show, the markets are ever so slightly mixed. We were hanging out in the red. They did drive the S&P back below the 4,400 level. Haven't been back down there. I say down there. That was crazy upside not too long ago. Now it's back, obviously, to the dark side. I got down, looks like around 43.97 this morning before they started to rally this thing. And so we were looking red heading into showtime. Again, another reason why you can't really prep for the show more than a few minutes ahead of time. And now, as we're kicking off the show, we're seeing the S&P up a little over 1/10%, and the NASDAQ and the Dow both slightly red to unched on the day. So it seems like we're starting to play out that movie we've seen before. They hit it in one direction in the morning, then they start to turn it. Of course, it seems like maybe this rally may be losing steam now, too. We might be moving back again the other way. Either way, all of this vacillation means our vol friends getting a little bit frothier, a little bit juicier since the Monday show. When we kicked off the show, VIX was nearly a 17, a little bit shy of it, 1685. That puts it up 1.85 points from where it was on the Monday show. So getting a little frothy, a little juicy. And then VBIX also getting juicy at a 104 when we kicked off the show, up a whopping 8 points. So again, vol back in triple digits. Look out below out there, listeners. It's time to perk up your ears and pay attention to what's going on out there in the market. VXX back at a 25, up over 1.5, about 1.6 points from the Monday show. UVXY back up over an 18 handle, 1840. When we kicked off the show, up about 1.4 points. SVIX back at a 27, down 1.7 points. Our old buddy, the once and future Dr. Vix, was on the network twice last week. He's just diving all over the place, taking over every show. He's unloaded most of his SVIX now, so he's actually full-on short this market, it seems like now, heavily short. So an interesting swing of sentiment for him and probably for a lot of you out there as well. UVIX 430, up about half a point. And VolQ 1980 up a little over one, about 1.4 points on the week. Let's go around the horn back the opposite of the way, I should say, that we started. Let's start in the land of the Flowmaster. Mr. Flowmaster, sir, a lot popping off. Seems like a lot popping off again today, sir. A busy week, busy day. What's catching your eye out there in the markets today, sir?
Volume's been pretty good. I think we haven't been back up at the 50 million contract level, but we've been solidly over 42, 43 million contracts for the last 2 weeks or so. It's I don't know. We still have earnings coming through. This Johnny John spinoff that I think I mentioned on the last show is continuing to play through. Still lots and lots of volume there. And it's always interesting, especially because people pay so much attention to the 0 days, and I know you want to talk about that later. When you get a day like today where the market is, almost dead flat, that's what some of these premium sellers like to see. So, just lots and lots of little things going on, I guess.
We can hit that 0 day stuff now because my inbox has been just deluged. It seems like someone hit the floodgates and said, hey, you know what, that Mark guy, he really wants all the 0 day data this week because I was just data dumped by CBOE and a bunch of other, all around the same time, too. It was within like a half an hour of each other. It was very interesting that everyone opened up the floodgates on all of their data and all of their analysis of 0 day around the same time this week. It was very interesting because I have quite the wealth of it to dig through in my inbox now. I know a lot of it generated by you and your team over there at CBOE, Mr. Flowmaster. I know you're a big fan of 0 day. I know you've been watching it for a while. And again, you're generating a lot of this data that they're sending my way. So I'm curious for you, sir. Give us the Flowmaster summary of all this analysis you folks have been doing. What have you discovered and uncovered in the world of 0 day, sir?
Sure. So, my colleague Jonathan Zayons, who is in my office, maybe we should see if we can get him on your show sometime. Very, very smart, young analyst and trader. And he put out a really nice white paper called The Rise of SPX and Zero DTE. I highly recommend anybody Google it, and you can just download it from the CBOE site. And Jonathan basically dug into kind of the history of how quickly the short-term trading has picked up. He looked deep at the volume, but also at the volume per hour. So, kind of trying to figure out if some of the kind of rumors were true in terms of, these condor sellers that we sometimes talk about, who would sell a condor in the morning, right? Sell a vertical put spread and a call spread and kind of hope to realize at least one side. And it is a pretty significant piece of the business. And I might have mentioned it on here. There's some kind of little algorithmic widgets that retail customers use to not only basically, put on these positions every morning at the same time, but also manage them with risk controls, basically, a stop loss, and also a profit exit target. And even has kind of some of the nuances down to closing just the short leg when you're into like the last half hour of the day or something. So, we continue to see very, very strong volume, even with VIX at 16, right? When we filled in the Tuesday, Thursdays in SPX, it was last May, and VIX was close to 30. So, the option premiums were much higher, and, volume basically pretty quickly approached about 50% of SPX volume. Some days it's actually over 50%, which is kind of mind-blowing. And we kind of thought that, when VIX is back down into the 15 zone and, you can't get $40 for the at-the-money straddle, you can only get $20 for the at-the-money straddle, maybe this activity is going to disappear. But it hasn't. It's continued pretty much just as strong as it ever was. We look at kind of some of the interesting things like the put call ratio in SPX, which tends to be around 1.7. Well, if you isolate just the 0 day, it's actually 1. It is almost perfectly matched up puts and calls very consistently. And that again kind of goes along with the fact that what you have in there is a lot of retail. It's literally almost half kind of mom and pop retail, which is surprising on a $4,500 index. But it just kind of shows you most of the trades are kind of spreads, capped risk. I recommend anybody download the paper, take a look. It's only 5 or 6 pages, and it's got some really nice data in there.
Yeah, I looked at a lot of it, and I've seen a lot of data, obviously, from 0DT. The one I keep coming back to, the one that still surprises me, is the one you just mentioned. The symmetry of the puts and calls. That is fascinating to me. I can't recall another product where we've seen anything like that before, let alone this persistently, this long out there. I thought maybe it would be an aberration. It would be for a couple of weeks or a couple of months. But no, it's been pretty much consistent week in, week out there, 1-to-1 puts over calls, which again shows a very interesting and unique use case cropping up around these 0 days that we haven't really seen in a lot of other products, at least not this consistently. So fascinating stuff. Check out the white paper if you haven't already, listeners. Just search for CBOE and 0DT. I think we'll probably be tweeting it out as well, so you can click on the link if you follow us. It's fascinating stuff. Again, if you like all this 0-day stuff and you're listening to a show like this, so you probably do, you want some data to inform your trading, then you could definitely do worse than checking that out as we keep rolling. Let's see if he's survived. The Locusts, they're banging at his windows, listeners, but he's still around. He is the rockingest of lobster. Mr. Rock Lobster, sir. Any surprises for you in all this 0-day madness? And then B, what's catching your eye out there in this yet another whipsaw-y market, sir?
The 0DTE thing, I think it's like anything. It's fun. It will have its, it'll have its day when we actually have a bit more of a meltdown. But it doesn't surprise me that, traders are selling more spreads and stuff like that, especially on a one day duration or 0-day duration. And also like from a margin point of view, I mean, you have to be realistic. Most firms, I would say like what we were talking about this like 5 months ago, are, I think a lot of retail firms have pretty strict margin controls in place, like Schwab's, TD Ameritrade's, E-Trade, all that. Interactive brokers, for instance, I mean, you sniff anything in their, in their electronic eye, like blows your position out. So, but I don't know enough about what they have. That would be an interesting report. Like, okay, what do all the electronic brokerages do for risk control? I was always more worried about, like the Cowens and kind of the old school, like sort of hedge fund broker dealers that might not have, again, I don't have any real evidence. This is just conjecture that 0DTE came out and they might not have had as robust a risk control, but maybe Henry knows something more about that. It'd be interesting to know what that is. But it has not caused a huge problem yet. So, but I don't know, one day it might cause a little bit of a cascade. I mean, we did get through that kind of banking crisis where everything was melting down. VIX shot up. I mean, nothing, it was a good old sell-off, but nothing untoward. So I still expect it to cause a problem one day. It just hasn't yet. But also people have not gotten, I don't think there has been, let's say a level of reckless complacency quite yet. As far as VIX goes in this market, I think we have, I'm looking at by my little skew indicators, like not all-time lows, but very, very high percentile, as in skew is in the lowest percentile, meaning like the 25 delta put relative to the at the money is extremely inexpensive where we are right now. And I think that part of that is because, we've been sliding down much slower than we went up, it feels like. We can't even slide down more than 1% a day in SP, in SPX. And when we were rallying, we would have these crazy rallies, and it would sit, and then we'd have these crazy rallies, and the market would settle. So from a vol point of view, it's a little curious. But, when I was in the SPX, the position you didn't want when the market was just kind of sliding down and dying like this was long future, long put. Because you just, the delta on, you have like a 30 delta put or a 35 delta put versus futures, and you're only down 0.5% a day. And just the skew getting annihilated as traders sort of roll their puts down, right? So I think that's kind of what's happening currently. Not so much in 0 DTE, but the other strikes that SPX trades. So I don't think that's anything out of the normal. It's like summer trading where we have that rally early in the summer and then we spend half the summer giving some of it back or something. So being on the other side of that nasty brew of long future, long put type position, I could see why SKU is not going anywhere right now. And then I think some of the VIX move is just we're moving lower. So we're just moving to the at the money strike, vol's going up. So there's not anything crazy about that. What I did think was interesting, and this is a thing I do look at, is I do like this 9-day VIX indicator. It's one of my favorites, versus VIX. And, normally when you're in contango, like there's a pretty good discount to the net for the 9-day. And right now we're trading about 30 cents apart, give or take 27 cents apart. So there's a bid for short-term vol that you can't quite make a case for like short-term realized, short-term realized vol. So, liquidity providers, they're not numb to the fact the market's not moving a lot. Like 60-day realized vol is 1069. That's pretty low. It's pretty low to have VIX at 17. For a 2-month vol that low, that's pretty low. 10-day vol less than 10, 990. So, we have I feel like the market is kind of, when they kind of bid the vol into that Brexit thing, everybody's like, oh, there's no way they're not going to vote against that Brexit thing, right? And then the English people did something crazy and they said, we're out. And everybody
they bid it, then they crushed it. Like they crushed it like a day or two heading into that vote. Remember, because there was some telephone poll in Britain that said they weren't going. So they actually came and annihilated. We talked about that. We were stunned. Like, who's selling vol ahead of this vote?
I know,
apparently everybody.
It was a miracle because I remember because I'm like, I got to get out of my vol puts now. It's like they're paying me now before the event.
Exactly. It was weird.
It was like a miracle. Okay. So, just for listeners, when you get an unexpected, golden egg dropped in your lap, take it, especially when it comes to vol, because it might not be there tomorrow. So, and there's apparently you're going to have this BRICS announcement, which, you could, I'm not delving into the politics, but having an alternative like currency block or whatever. The euro never kind of made it because the ECB somehow managed to be more disorganized than the U.S. government. Because you got all these, countries trying to. I can't even imagine how disorganized this BRICS thing is going to be. You got Chinese, Russians, Brazilians all fighting over some currency thing. However, it does add a little uncertainty to the mix. Powell's going to say something at Jackson Hole. I don't know what he's going to really say now that rates are like 5%. Maybe he scolds the government for spending a gajillion dollars a year. Maybe he doesn't. But you got a vol that's pricing something that ain't happening, and we've invoked this on the show, so I will invoke it again. The Dark Lord has yet, what we used to say, the Sith Lord or whatever, has yet to reveal himself. So vol is up there, but the market really ain't, making the move to support the vol. And whatever reason traders are bidding it up, they are. So, the price is a signal. And I would just listeners, the market thinks something's going to happen. I don't know what's going to happen. Maybe they don't like NVIDIA earnings next week, or maybe the NVIDIA earnings takes the stock to 500. I really don't know what that thing. It's like a monster. But there's a bid for vol that shouldn't be there. If I was trading, I'm like, okay, I'm just going to, all right. So they're going to let me sell 16 vol or 17 vol or whatever, sell this downside. And we're not really moving. And the theta, that if you're short, if you're long theta, you're doing pretty well in this environment. So, 2-3 week stuff, 4 week stuff, because all we do is kind of slide down. It's pretty easy to manage. So, but the bid's still there for it. So I'm curious to see if anybody has thoughts about this, but I can't figure out, why the market is bidding it. But, on a benign summer day, 9-day VIX is 1675 and the SPX is down $3. Like not SPY down $3, SPX down $3. So it's a mystery. It's an enigma shrouded in a mystery right now, as far as I'm concerned.
By the way, I love that everything you put down had a nice soft bed of crickets underneath it. It just made it sound like you were coming to us from a campground somewhere while you were breaking down.
Sebastian jokes. He's like, we don't even need your laugh track anymore for your bad jokes.
Yeah,
we just have the crickets in the background all the time.
Just have the crickets. Who knew Maine infested with crickets, or as we call them here on the show, plagues of locusts?
Plagues of Locusts. I think that's a great title for the show.
There we go.
Plagues of Locusts.
Infested by plagues of locusts and perhaps dark lords of the Sith. Even though we all know the rule of two, there can only be two when it comes to Sith, listener. Let's see if Uncle Mike, is he the master or is he the apprentice? Let us find out, because he has now returned to the St. Charles Global HQ. He has polished off a Skippy Zeros and lemonade while he was waiting, and now he is ready and raring to go. Uncle Mike, sir, what is catching your eye out there? And B, are you the master or the apprentice when it comes to the dark side? And C, do you have a nice undertone of crickets to underlie all of your audio, sir?
Man, that's a lot of questions to come at me right after a Skippy Zero. But with that, I try to avoid the dark side. So from that standpoint, as best I can. And in terms of the crickets, I don't know if we have too many crickets out here in St. Charles, but I'm sure we can accommodate. If anyone wants to see some crickets out in St. Charles, we can find you some. But in terms of the marketplace right now, it is an exciting, boring day, if that makes sense, in that we have some stocks that are moving. So like just as an example of things that are moving right now, you do have Netflix down $6, which that's not a huge deal for Netflix, but you do have that happening. You do have Apple down roughly 1%. Amazon's really not doing too much. Google's actually up over almost $3 on the day. So it's not like there's no movement going on out there, but it's like the good is outweighing the bad for a little bit, then the bad outweighs the good for a little bit. Whatever side of the market you want to call good or bad, you can apply it either way. But it looks like there's just a lot of exciting things going in different directions, and it becomes very boring when you're looking at SPX or SPY that's relatively flat on the day. Now, we have had a lot of movement or a decent amount of movement on the day. Nothing too crazy, but we have had a little bit. Bonds continue to go lower. And so it's just interesting to me that we do still have the sellers in the bond world. At some stage, we are going to stop raising rates. And so it just going to be interesting for me to see if we get a little bit of a rally, or we are forming a floor in the bonds. But for right now, there is no floor from what it looks like. It just keeps going lower gradually. From the standpoint of sectors, we have energy up the most on the day, with XLE up roughly 2% on the day, the ETF that tracks the energy sector. But aside from that, I can't really see a lot right now as to what's happening from the standpoint of what's driving the market, or because it's really not driving that much. So I think we're still in kind of a little bit of a wait and see mode. The market does appear to be respecting the 4,400 mark in the SPX for right now. It's a key number, and so we'll see kind of where we are with that. I believe we haven't been at those levels since late June, early July. So we are coming down a little bit with that. And it's going to be interesting to see at what stage buyers do come in, if buyers do come in. But perhaps this bid up in vol might be a sign of the zombie apocalypse might be coming, and it might be starting in Maine. Maybe that's where it's coming from. So there's a lot of nothing going on. It's an exciting road to nowhere kind of day to day from what I'm seeing.
I like how you put that, an exciting, boring day, because it is an apt description. Moments of excitement, and then kind of a lot of, a lot of crickets in the background for the rock lobster out there. Let's see what's lurking out there in this exciting, boring day from a volume perspective. And if you just looked at these numbers, listeners, apropos of nothing else, if you looked at them devoid of all context, you would say, man, it's a pretty banger day out there. And you would be kind of half right. because the volume is certainly heavy. As you said before, VIX likes itself a good whipsaw. And, SPY, the rest, they're not immune to a little bit of love for a good whipsaw either, because right now VIX hanging out at 660,000 contracts on the tape. That's a lot of paper for this time of the day in VIX land, listeners. The ADV 786. So again, we're in mid-August. As the Rock Lobster said, there's a bid for vol that shouldn't be there. There's a boost in volume for VIX options that shouldn't be there in mid-August. This is one of the quote-unquote dead periods of the year. We have the dog days of summer, and we have, mid to late December, the holiday period, are the two times you could usually set your watch by in terms of light volume, and yet we're not getting either out there this time. So that makes it doubly interesting out there. Again, threatening 800,000 contracts a day in the middle of August. That is nothing to sneeze at, and perhaps an indication of what the Rock Lobster was saying. Maybe the Dark Lord is lurking out there, has yet to reveal himself, but is starting to give hints of his presence in some of these numbers out there. SPY closing in on 6 million contracts already. Usually SPY somewhere between 4 to 4.3, 4.4 million. So SPY looking pretty robust, 5.86 million right now. The ADV just ticked back up over 8 million, 8.01 million out there in SPY land. So SPY putting up some numbers. The S saying, hold my bear kid, 1.8 million contracts already out there in SPX land. The ADV, 2.86 million. So closing in on 3 million contracts a day again in the S. And not to belabor the point, but it's mid-August, listeners. This is somewhat aberrant. Let's look right now, since we're talking all this zero-day madness. I just pulled it up on the old FlowMaster's platform to see how many of today's most actives are expiring today. I'm looking at the top 20 right now, listeners. And I see two in the top 20 that are not expiring today. So that's actually a lot. I expected it to be 20 for 20. And if we expand it even further into the top 40, looks like we get close to 10 that are not expiring today. So intriguing. It's not all zero DTE. It's just mostly zero DTE, but intriguing stuff out there. Again, check out that white paper if you want some more interesting nuggets out there. A lot of zero-day data flown around this week. It's easy for you to sink your teeth into it if you are so inclined. The small caps, IWM, looking pretty respectable right now as well. 660,000 contracts on the tape for IWM. Small caps off nearly 0.5%, about 0.4%. So unlike the rest of the market, they have yet to erase pretty much all of their losses today. 808,000 contracts is the ADV out there. So small caps and VIX looking pretty much about the same from an ADV perspective right now, which is kind of interesting. And then the Qs, 2.5 million right now, the ADV 3.63 million. So the Qs are going to hit it. You don't need me to tell you that. Let's go find out instead what's cooking out there. Is it a banger day from a single names perspective? And the answer is kind of, yeah. I mean, it's a respectable, certainly. 264,000 contracts is what it cost you to break into the top 10 today, listeners. That gets you to the artist formerly known as Facebook. Meta off about 1 2/3 points, trading 292 2/3. So getting a little bit of sell-off. They crushed it as low as 290.41 this morning. So it has rebounded over 2 handles from that low. It opened at, actually hit a high of 296.05. So again, not to belabor the point, but we have done a lot of living already today out here in a lot of these names, listeners. That's impressive. About a $5.50 range out there for good old former Facebook. Number 9, a new name sneaking into the top 10, which is always fun. Again, it is earnings season, listeners, so you do expect some of this. Good old J&J bucking the trend, lifting up about 1.25%, about 0.75% today, trading 173.65. Good for 280,000 contracts and the number 9 spot. Looks like it's had about a $2.50 range on the day out there today. Number 8, this one has become a frequent offender ever since its last earnings cycle. This is Palantir. Man, they are coming for it. Is the bloom off the lower-priced AI rose? Not sure. More sellers than buyers out there today. That's for sure, listeners. 14.42 right now, off a little over $1, nearly 7%. So a rough day for them. And let's see, over the past week, they got up to nearly $16. So they've given up about $1.40 from those highs out there. About 15.80 is where they hit. But intriguing stuff out there. Palantir good for 304,000 contracts. And the number 8 spot. Number 7 is an actual newcomer, which is always fun to see. J&J we talked about before, obviously. But this one, KVUE Inc. This is, of course, related, obviously, to J&J, hence its inclusion here now. This is a spinoff of J&J on the consumer health side. Ticker symbol KVUE, trading 22.65, off about a quarter today. Good for 323,000 contracts on the tape today, so nothing to sneeze at out there. Let's see if I could type the right symbol in. There we go. Let's look really quickly and see for a name that's not usually lighting it up what the big dog is today. 36,000 of the SEP 30s going up today. Again, the stock is 22.66, and then 34,000 of the AUG 25s. So could be a bit of a roll. No, that's opening on the AUGs as well. So interesting. There's a lot of 30,000 size prints all over the place. SEP 25s, SEP 30 puts. It's a lot of dense paper going up in KenView Inc. today, listeners. Number 6, AMD, listeners. The first half of the chip zone coming up at its usual spot. Number 6, 362,000 contracts. AMD off nearly $2, or about 1.8%. It was about 90 cents lower earlier this morning. It's 105.26 right now. It was 104.36 earlier this morning. Number 5, the Amazonians. Remember, they had some decent earnings numbers. Seems like the bloom is off that rose ever so slightly now. They tried to crush it this morning. They got it down to 133 and about a half. It is now 134.89. Still off about 20 cents on the day, but it seemed to have erased most of their losses. Good for a number 5, 470,000 contracts out there. Number 4, listeners. Again, the chip zone coming in exactly where we expected. 4 and 6. Number 4, it's NVIDIA, 605,000 contracts. NVIDIA, you can't keep a good AI name down that's at least over $400 because NVIDIA's rallying while Palantir giving up the ghost. 436 and a quarter, up about $1.40 today. It's like it's had a nearly $8 range. 432.70 on the downside, 440.62 on the upside. So, man, whipsawing all over the place today. Number 3, it's AMC. The King of the Apes is back. We talked about it before, the whole ape deal. So a lot of focus on AMC. Actually popping today, up about 14 cents to $3.90. They got it up to $4 earlier this morning. Seems like it couldn't maintain that, but good for 740,000 contracts. And the number 3 spot out there is folks spooked about all the dilution of their AMC shares here. We'll see if that keeps driving some paper. Number 2, been a while since we've seen the fruit company at this level threatening 1 million contracts. I guess all you need is a little bit of a sell-off out there in Apple land to really spook the diehards. 174 and about a half right now, off about $2.10 for Apple. They got as low as 173.83, so looking pretty weak today. And nearly 1 million contracts on the tape, 995. That's respectable for Apple again after. That used to be kind of what you'd expect, but now it kind of has fallen off. We've seen it down at number 5, number 6 sometime recently. So threatening 1 million contracts again, that's respectable. And number 1, the big dog, it's Tesla. 1.5 million contracts, $2 to the dark side today. 223.64 is where it's trading. Looks like it's had a range of about 221.5 on the dark side, 226.74 on the upside. As we keep on rolling, we already don't have time for the earnings, listeners. A lot popping off as we keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we get weird, we get wild, and occasionally whimsical, like all these fun images that the FLOWMASTER is putting into our show outline today. It adds a certain fun element to the show going forward as we keep on rolling. Speaking of a fun element, let's get to some of these FLOWMASTER names that he's looking at. First off, this is a newcomer here to the Odd Block. This is On Holding AG. This is a running shoe company. Ticker symbol ONON, ONON. Trading $30.68 right now, up about 35 cents on the year. It's had an interesting saga. A year ago was $24, pretty much even. So they've had a nice run from there. They actually crushed it down all the way in October to about $15.44. Seemed like that was the low right around mid-October of last year. Since then, they rallied it. It actually popped hard in March. It went from $20 all the way up to about $34 in May. So over that couple of month period, it had a nice run. Then it fell off again in May, late May, got back down to $26. And then since then, they've rallied it again. They took it all the way back up to $36.83. That was the high for the year. Just a little over a week ago on August 9th. And then since then, they apparently have just come for this name because it is trading now $30.69. So apparently, Mr. Flowmaster, a very volatile running shoe company, sir. What did the eye of the Flowmaster spot out here today?
Sure. Yeah, these are the shoes that the brand, I think, is On Cloud, and they're very fashionable in New York. And, you know, I noticed that there were put buyers into earnings, which were last week. I think they were last Tuesday. The stock, I think, lost a couple bucks or $1.50 into earnings. And then it really got hurt in earnings. So it was one of these cases where whoever was buying the puts, you know, their instinct was correct in that it was a big downside move. But then, you know, I looked at it and I guess it kind of struck me as one of these things where, like, okay, so they got it right. They got the move that they were looking for. And then kind of things stabilized, and the stock's actually had a pretty decent bounce back since. So it was really more, you know, coming into earnings, it was the 35 and the 33 strike puts that they were buying in the August term. And then on earnings, basically stock fell from 34 to $29. And so I actually bought a little bit of stock myself the next day. We did start to see some call buying pick up. And it just kind of felt to me like it was, they got the move they were looking for. The stock's back up towards 30.67 right now. You know, today we see about 4,000 of the October 30 strike call buyers. Okay, so those are pretty chunky calls. You know, 280. So that's almost $1 million in premium there. So I kind of felt like, you know, like this stock's got a decent kind of chance at a rebound. It was an interesting one.
Mr. Rock Lobster, sir, are you also intrigued by this potential opportunity here in your new favorite name, On Shoes, sir? Oh no, the crickets have gotten to him. Mr. Rock Lobster, are you alive?
You know what? The crickets took over. It was a battle to the death. It was a battle to the death.
Oh, I hear them. They're back. They're just knocking at the window pane.
They are back. I didn't. You know, this stock has come up as put buyers before, and it's had some pretty. Earnings are not happy for. Usually, the last couple cycles have not been super happy for this stock. But I have it is on my list. But I haven't really done anything with this name yet. Although I haven't purchased the shoes. And gosh knows I could use some fashionable tennis shoes. But it looks like they might have made a little money on these puts. I'm trying to get look at just the straight prices. But I don't see if the Flowmaster if they actually picked up a sale on them or not. But if they closed them. Or they could just, what Henry did, and they just bought stock at 29, and then it would appear that they should have made a couple of bucks on these things.
You got to pull the old Peter Lynch. You got to actually go buy the shoes and try them on before you and trade in the underlying. He used to go sit in the parking lots of like the Walmart, right, and see if they were busy. You got to sample the shoes for yourself.
Yes, Mr. I believe Pier 1 Imports. That was that was the one. Seeing the ladies leave Pier 1 Imports with all the buckets of wicker stuff.
I just have images of him just lurking like a creep in all these parking lots, watching people come in and out of stores. It's a fascinating visual, listeners. As we
funky white hair, kind of staring out the window of the car. Yeah, I don't know about that.
As we keep on rolling, let's see what other kind of funk we could find here. What's what the Flowmaster got in store for us? You never know where we're going to go on Flowmaster Thursdays, listeners. He's taking us to some weird places. Like next up, running shoes, not your boat. How about zinc-based batteries? Because we're going to EOS Energy Enterprises, Inc. Say that 5 times fast, I dare you. Ticker symbol EOSE, listeners, trading $2.66. So this is one of our resident cheapies here today, listeners. Off about a nickel, not a huge mover today. On the year, let's see, a year ago it was trading $1.88, so it's had a decent little pop. But it's kind of hovered right around. Actually, it was almost literally unched. By May, it was $1.89. So it had moved net a penny. Then it went on this rampage in May. It shot up May 25th, and it was $1.89. By June 28th, it was $5.66. So my goodness, It had quite the run in June, hung out there for a little bit, then it fell off almost as quickly as it went up. By July 28th, so man, it did all this living in the span of 2 months exactly. By July 28th, it was back down to $2.26, and it's been kind of vacillating in this low to mid twos range pretty much ever since. My goodness. This name is all over the place. You thought we had fun with ChargePort and others, listeners. Mr. FLOWMASTER, sir, what did your eye of the FLOWMASTer find out here in everyone's favorite zinc-based energy name, EOSE Energy, sir?
So this one. It does look kind of like a wild rider. Well, it traded 124,000 calls on Tuesday. That was following earnings. So, I think I mentioned on the last call, we're definitely seeing some little pockets of meme style speculation, hard to borrows. Names where Tupperware was a good example, right? That that thing he shot from $1.50, it went down to around 65 cents, and then it was $5 about 5 weeks later. So it doesn't take much for some of these low dollar names to catch a real strong bid. How long it lasts is kind of up for grabs. But so in EOSE, which I don't think I'd ever really seen before, we saw a lot of buyers of the 3/2 calls in the 50-cent range. On Tuesday, that's when the stock was 271. So, and I mean, a lot by a lot, I mean, 50, 60,000. I don't know what the company does, but a total of 38,000 of these September 3/2 calls were bought. Open interest went up by about 25,000. So there's some sticky positions there. It's one of these ones, like you said, it's basically flat today. But I would keep a close eye on these. I kind of feel like, currently keeping a close eye on stocks that are, in the $2 to $6 or $7 range, in case they get hot, is possibly a good play.
Yeah, this is an interesting one. I just pulled it up using the old FLOWMASTer tools while we were talking here. And yeah, the largest open position in EOSE right now are the Jan 5s. There's about 64,000 of those bad boys open, followed by about nearly 60,000 of the SEP 3/2. So you're right, some meaty, potentially sticky blocks of paper lurking out there. And everyone's new favorite. You like this one, listeners? EOSE, Mr. Rock Lobster, if you can fight off the hordes of locusts again. Anything catching your eye out there in this very volatile zinc battery name, sir?
I thought wasn't zinc batteries supposed to go the way of the dodo?
They all were. Hydrogen fuel cells, they've all had that spirals, and they've all come back, sir.
I guess so. Interesting, just non sequitur, but the clean energy ETF, which used to be quite hot, ICLN, is at a year low. So it's on my year low list of just junky equities that used to be something or now that are not. Just not related to anything, of course, here, but this does have all it is a battery company thing that maybe they're getting some Biden bucks from the Inflation Reduction Act. Who knows? But it's one of these where they blow hot, they blow cold. And I think Mark and I saw some paper in this a while ago. I'm trying to remember. I could swear we did, but I mean, I would think. I don't know what the call buying mania is, but I guess it does. Like Henry says, this potential meme on it. But as of right now, like all of these names look very dead. Right now, I know that they're at year lows, so and maybe they pop or do something, but as of right now, I think if you're buying calls in these things, it feels like a little, it's feeling a little Hopium-esque. I could see just buying the stock and giving it a whirl, but I don't know. Feeling a little Hopium-esque on this one.
If you want some Hopium-esque trades, and Mr. FLOWMASTer is talking about keeping an eye on the $2 to $7 range. We have some puts and some name for 15 cents. Those aren't exciting me right now, but we did just fire up the Eye of Sauron, and it did just come back to us with some more calls and some cheapy names. So let's wrap up on those because those are more fun. They have more fire to stir men's blood. Let's go out to Heron Therapeutics, ticker symbol HRTX. This one trading about $1.50 right now, off about a dime. On the year, let's see, a year ago it was trading $5.11. So the trajectory for this chart, listeners, has not been great. Actually, over the last, I'd say, couple of months since June, it seems like it bottomed out. It bottomed out in June around $1.07. So since then, it's up nearly 50 cents. So if you want to look at glass half full, it's up nearly 50% in the last 2 months. But the rest of the year is still off nearly 70% net, or about 3.5 handles. But it seems like, Mr. Flowmaster, somebody might be looking for a little bit of the old upside to come back. The Dees, 2 calls for 15 cents. 3,702 times this morning. It looks like they kept coming back. They were actually 15-cent bid out for a little bit there. Total of, looks like about 13,000 on the day. Mr. Flowmaster, sir, did you notice this block of calls going up in everyone's favor? I'm not sure what type of therapeutics they do, but intriguing stuff here, sir. What say you, Mr. Flowmaster?
Yeah, I'm looking at it. I didn't notice those earlier. The data does make it look like it's a customer seller, at least on the CBOE exchange group executions. So that 15-cent range maybe a overrider just trying to squeeze out a little something for the rest of the year. I mean, the yield on a $1.50 stock for a 15-cent call is not that bad as long as it doesn't go to zero on you. So, I don't know.
Yeah, a bunch of them went up kind of around the same time. So you're right, all of them 15 cents, and then it kind of moved to 15-cent bid, and they kind of crushed it. So you're right, it could be a sale. It's kind of a funky, it's less exciting as an overwrite, but intriguing stuff here nonetheless. It's not a bad yield, obviously. You're talking 10% through December, so we've seen worse things for a $1.50 stock getting roughly 15 cents. But usually in these types of names, listeners, we see people swinging for the upside fences. So maybe we'll hold out hope at the end of the day. Maybe they scooped up a few of these. But we always hold out hope for some fun feedback and some fun insights from our listeners. Let's get to that now. A little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, listeners, let's get to it. Let's get to your feedback out there, hot and heavy. We never got a chance to pay off our question of the week from last week. We'll do that really quickly. We asked you along the lines of what the Flowmaster was just talking about. We asked you, we've seen a resurgence of volume in AMC, GameStop, SoFi, and others that were popular back in the meme stock frenzy of 2021, which raises the question, is the meme stock frenzy back? This one was pretty contentious all week long. It ended up pretty close to evenly split. The no's took it, though, 54.5%. The yeses, 45.5%. So ever so slightly, you folks saying the meme stock palooza is not back. Getting out to today and this week's poll, we're revisiting our question of the week from the beginning of the year. When we asked you this in January, you folks, 43% of you chose the SPX. That turned out to be a pretty decent pick. So we're re-racking it to ask you this question again. Quite simply, if you had to buy a 10% out of the money call expiring at the end of the year in one of these 4 asset classes, which one would you choose? Gave the S&P 500, Bitcoin, crude oil, or volatility, a.k.a. VIX. Let's go out to the uncle list of Mike, sir. Mr. Uncle Mike, sir, are you surprised that our audience, first off, are slightly leaning towards the no in terms of is the meme stock palooza back? And then B, what is your choice, and what do you think our audience is choosing in our 10% out of the money call pick'em, sir?
Well, in terms of the surprise of it, nothing surprises me. We have a very good audience. But with what I would pick in the 10% out of the money, I mean, I got to go with SPY, of course. But you're not letting me sell early. If you're letting me sell early and buying it out of the money, I think I would just go with a VIX, just because of the fact that a 10% move in the VIX is not that big of a deal. So that's why I would go with VIX. Just want to reiterate that. But if you're making me hold them till expiration, I think I'd go with the S&P. In terms of the meme stock palooza, I think that it's over from the standpoint that it's not doing what it did when we really had it, but it's always going to exist to some extent. So I think it still exists, but just to a much, 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 much lesser extent. There won't be doing any Netflix specials on getting rich from meme stocks for 2023.
Oh, I hear the crickets. That must mean the Rock Lobster wants to chime in. Mr. Rock Lobster, sir, first off, are you surprised that our audience says ever so slightly that the meme stock palooza is not back? And then B, which way are you going in our 10% out of the money call palooza?
This is a good one. I like this. I'm going to say they're like meme stock is not back. I think it's dead. That was a stimmy money phenomenon. And in another decade, there'll be another one. It'll be another phenomenon. But for right now, I think it's dead and buried. And I think interesting here on this one is I am torn between crude and SPY. And as of right now, I'm gonna tip to SPY on the 10% out of the money call. Mostly because we're down 4 or 5% just from recent high. So it's not my favorite, but I think the crude is close. But I'm going with SPY on that now.
And Mr. Flowmaster, last but not least, you're just talking about the meme stock palooza. Are you surprised that our audience leaned ever so slightly into the negative territory? And then B, which way are you and which way do you think our audience is going in our 10% out of the money call extravaganza?
Well, I think I said before, I think that the meme activity or that super speculation, it is a fickle beast. And I agree, it probably was a little bit more rampant when interest rates were zero. Because people were kind of willing to take shots. But on the 10% out of the money, I'm actually going to go with crude oil.
You think our audience is going that way too?
Yeah.
All right, listeners, let's get to it right now. And you think I would have done this before? I'd have it pulled up. There we go. Right now, listeners, it is a contentious fight. It's funny. I mentioned that 43% of you chose the SPX, SPY early in the year. And for a while there, we were hovering around 43% again for the S&P 500. So weirdly similar percentages. That has dropped now. 37%, still the first place for the S&P 500, followed by 29.6% for crude oil, 25.9% for number 3 for volatility, and Bitcoin. No love for Bitcoin, only 7.4%. All right, listen, that music means we've come to the end of another epic sojourn through the world of all things options. But before we go, let's go around the horn. Let's start with you, Mr. Flowmaster. If folks want to check out, get access to really that daily email, or check out all the cool white papers and data you guys are putting out on zero DTE, where should they go? What should they do, sir?
CBOE.com/RMA. And for the white paper on the rise of SPX and zero DTE, just Google it. I looked at the link. Well, actually, Mark, you can send out the link too. But that paper is free, and there's some juicy data in there. And everybody have a great week.
There you go. Check it out. CBOE.com, the place to go to begin your journey to the dark side of all this data. It's a fun journey, listeners. Even if you do maybe encounter the Rock Lobster's aforementioned Dark Lord of the Sith. Speaking of the Rock Lobster, sir, I'm glad to see you survived the plagues of locusts at your door. I'm not sure if any of us will survive the Dark Lord of the Sith that is lurking in this market, sir. But if folks want some guides as to how to handle this upcoming turbulence potentially in the market, or perhaps how to fend off the plagues of locusts at their door, where should they go? What should they do?
Yes, you should go to optionbit.com or Money Map Press, where I'm having a good year in both places. One of the top newsletter educator guys over there at Money Map Press. So if you want to learn to trade SPY and VIX, that is an excellent place to do so. And 888-TRADE-01. If you heard this here show, you tell our customer care team I heard this here show. You get 10% off any of my products there. So you can learn and earn at the same time. Oh my gosh, it's hard to believe, but it is true.
Learn and earn and battle against the plagues of locusts. OptionPit.com, the place to go to learn more. And last but not least, he has no plagues of locusts. He has no dark lords of the Sith lurking in his closet. He is just the uncleest of Mikes. Mr. Uncle Mike, sir, if folks want to come to you for a little bit of a happier, light side content, where should they go? What should they do?
Well, if you don't want to hear about plagues of locusts and that type of thing, check me out on Twitter, at Mike TOSAW, TOSAW. Give me a follow. If you're looking for a financial advisor who will use the option product if it's appropriate for the client, of course, feel free to check out my website, stcharleswealth.com, and set up an appointment to talk to me. I like people. I'll talk to you.
He does like people, unlike me, so you go check him out. He'll give you some unhealthy snacks and maybe some Skippy Zeros and lemonade. It is going to do it for us here on the old OB today, but never fear, back in a little bit with This Week in Futures Options. I'll be joined by Rich Excel. He's always got some great analysis, some great research reports, some great trades he's working on in a variety of different options products, so we'll sink our teeth into those and a whole bunch more coming up if you're listening live in a little under a half an hour here for TWIFO. Of course, if you're listening after the fact, just hit next on your device of choice. Should be there waiting for you. Back again tomorrow, noon Central, 1 p.m. Eastern, to break down all this vol madness. I think we have a lot of stuff to talk about on that show tomorrow, so tune in to Volatility Views tomorrow. After that, exclusively for all you pro cats and kittens with options oddity, should be a fun one there as well. Thankfully, Locust free tomorrow, so that'll be fun. And then, of course, if you want to get access to that, all that other cool stuff we do on the pro side, theoptionsinsider.com/pro. Then back again on Monday, another episode of the old OB. Stay safe out there, everybody.
The Option Block is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's tools and services gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/VIX today to learn more. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.